The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Tom is off for the day. Well, he's not off for the day, just for this hour here. He is out buying real estate. You got to love it, folks. A bull in the real estate market. And if you have not had a chance to check out the special report that he did, the white paper, the bull market in Florida housing, go over to the homepage at tfnn.com. Click under the breaking news area. Go ahead and download that. It's a good, doesn't matter whether you're interested in the Florida marketplace or any place else, just a lot of great information there. If you are struggling with what to do with your long-term money and your retirement funds, and you just simply qualify as a qualified investor, go over to the right-hand side of the TFNN homepage. You will see the Tiger Real Estate Opportunity Fund. Click on that button. You can also email Kathleen at tfnn.com and get some additional information about it. I always want to put that long-term money to work. You want to buy low and sell high. That is the idea of real estate. Will continue to rise out there. Signals all over the place here. As we come into the markets, and if you are watching us on Tiger TV, thanks so much for doing that. Those of you listening in on a radio station, perhaps your mobile device, your iPad, your iPhone, your Google device, thank you for doing that as well. You can always catch an archive of this show on Channel 10. That way you'll be able to take a look at the charts that we are looking at right now. What we have on the screen here is the NASDAQ futures. I think that's where you want to be paying attention to, because they gave the best signal yesterday for a bounce. We had the lunar aspect of the new moon and a solar eclipse. If you were in the land down under, you got to see really a beautiful solar eclipse that came in at about 6:30, and just simply but what you want to understand, folks, and if you've not tried my newsletter service, you really should. It's 30 days, unconditional money-back guarantee, so much information in there, certainly a lunar solar chart that you want to be paying attention to as well as so many other things. For example, the NQ 30-minute chart out here on the NASDAQ futures. I say this is what you want to pay attention to. Yesterday morning, when we were kicking off the Trader's Edge show, coming into the 9 o'clock time frame, one of the things we were looking at, well, we were looking at a multiple of things here. One was an A to B equals CD down that was completing a 1 to 1.272 A to B equals CD down in the 25.58 range. I'm going to go ahead and delete that off my screen. And what it was also doing, though, was coming against one of Steve's hammer candles. And that was a hammer candle that formed right down here at 8:30 in the morning on November the 9th out there. That level was tested. It was tested as we were coming into the 10 o'clock session out here. You can see not only did it hold, formed a very nice bearish engulfing candle. Market pulled back into the time frame of 4 o'clock yesterday afternoon, did a little bit over a 0.786 retracement, then moved higher. That hammer candle, this bullish engulfing candle, now the actual support on the NASDAQ futures would really be the 25.53 mark. The low of that hammer candle is actually 25.5625. The overriding support here now goes to that bullish engulfing candle that formed at that 10 o'clock session. That has given, now there's a couple other indicators out here. I'm not going to go ahead and put those on the screen, but they are in my newsletter telling you why we went long the Qs yesterday as we got the signal out here. The market does want to bounce. It is going to bounce out here. That doesn't mean you go all in, folks. It means you want to make sure that you are using money management, because no matter what the charts say, no matter what I say, what you want to do is you want to make sure that you're using sound money management. That means that you don't need to risk more than 1% on any trade. Oftentimes, it's actually less than that. And I've got a position size calculator, a tool that's on the homepage of TFNN.com. If you're new to TFNN, you've not used this. Position sizing is the most important thing other than using a stop out there. And if we take a look at that, if you go to the homepage of TFNN.com, I'll go ahead and punch that up on the screen here on Tiger TV. Over on the left-hand side, you will see a little tool that has an up arrow and a down arrow. Move down all the way till you get to the power of position sizing. click on that. There's a video that goes with it that shows you as instructional video, shows you how to actually use it. We can use it here on trades as well. We were taking a look at Sony earlier, setting up a trade. We'll go back to that one in a bit out there. But go ahead and make sure, that's my gift to you if you have not used it before. Let's go continue to take a look at these markets out here. Let's take a look at what is popping in the market. You got Abercrombie and Fitch off to a great session out here. ANF is the ticker symbol. That is up with volume. It has nice volume in it, but it's coming up against an area where it most recently broke down. So you see, got a little doji candle today as it bounces up. It has 12 million shares in it. Of course, this is coming up, and let's draw the line across here because we'll pay attention to this. It's coming up against an area where it most recently broke down. That happens to be the time frame of May the 16th. May the 16th gaps down with 13 million shares, similar volume to what it is that you have today. Expect that area to be your first area of resistance. If it can't get up there, that would certainly make you say, something to think about. And when I say that area, we're talking 42.85. That is the May 16th high. You're trading inside that area right now if we just simply draw the line across. And so I suspect that Abercrombie and Fitch will go ahead and make a run for that level. You've got F5 Networks. That is the second leader in the clubhouse today. Dollar-wise, up $3.59 out there. FFIV is the ticker symbol. So let's go take a look at what F5 Networks is doing. Were they out with any earnings? Let's see here. They're up 4% this morning. Earnings-wise, I don't see any earnings. So let's go take a look at the actual equity chart, see what it is doing. It is trying to get back up into the last area where it broke down. So you got a lot of stocks, or a number of stocks trying to do that. Some of these setting up perhaps some good short trading candidates out here. F5 Networks trying to get up into the area of October 24th. The low there, $93.02. 4.2 million shares up there, trading at 90.10 right now. You can see that thing broke down on October the 25th, 8.5 million shares to the downside. So as this thing makes its way up into the 93.02, that 93.02, I hope that's the number that I said, 93.02, that's the low of October 24th out there. That will give you a little bit of a signal as to what it wants to do. Could be making an A to B equals CD up. The B point on this is November 7th. Small A to B equals CD up, has 3.3 million shares. The high is $90.41. Thus far this morning, 614,000 shares, 45 minutes of trading. That says that it could take out the level with more than 3.3 million shares. And A to B equals CD up on this equity would go ahead and take it to a price point projection of 94.49 and 97.04. If it can get to 97.04, that says it would go ahead and touch the high of the October 24th candle, that being $97.94. That might be setting up if it's coming in with the right volume, might be setting up a pretty nice trade. Let's pull this thing back even further here, see what other kind of volume. Let's put this on a monthly chart and see what we can see as far as support or resistance out here. This, again, is F5 Network. So we know this thing has a decent support here at the lows from August 31st, 2011, that being $69 and a penny on a weekly basis. Had one heck of a nice bullish engulfing candle out there. So if you were trying to set up any kind of trade on this, you would have to suspect that the $69 level would be all that you would get out of it. Not too bad considering it's a $90 stock here right now. So let it come up and test that area. That's what is going on with the F5 Networks. Otherwise, really just traveling in a sideways consolidation from those $60 lows all the way up into the $139 price point. That's the most recent swing point from April 30th, 2012. Not a bad trading range out there. That was on F5 Networks. Let's go take a look at Woodward, Inc. WWD up 11% here this morning. Looks like just simply a guidance. Oh, no, they were out with earnings. So $528 million in sales versus $489. They did net income of, good question, I don't see the net income out here. Why is that? 66 cents earnings per share versus 60 cents the period earlier. Let's go take a look at the chart and see what it is doing. We know it's up 11% this morning. WWD, let's see if this gapped up. It did with volume. So let's go see what this equity here is doing. Had a high volume low that got tested here recently. Didn't get all the way down to the bottom, but it has moved out of that area. So right now, what it is doing, it's taking on the swing point or moving up to the level it's actually tested it. So let's go draw a line across here so we can pay attention to volume and price and see what it's actually doing out here. That means we're going to go take a look at the swing point from September 14th. September 14th, that day is coming up quite often. That has 274,000 shares out there. So as we take a look at some of these stocks here that are trying to pop to the upside, that is today, this WWD Woodward Inc. is doing it with volume because that swing point from September 14th, 274, that's how many thousands of shares, 350,000 shares so far today. Should be able to tackle that area. As it does that, we do see that this has been an area of resistance before, so we'll see if it can close above $37.74, or if it starts to just simply peter on out there. Now, not the most bullish of stock charts out here. Let's take a look at a trend line coming off of the highs from February the 3rd out there. And so you can see right now what it's doing. It's moving right into that trend line. Kind of interesting how a stock chart will do that. You want to make sure that you use trend lines and other tools, all the tools that are available for you to analyze a stock out here. So we can see this has moved up into that trend line and right now has rejected that area. Let's go take a look at Priceline. Priceline down $2 and change here this morning. Not really a big deal, but that is the second in the clubhouse on the way down. Stamps.com is numero uno this morning. We'll go take a look at Stamps.com as soon as I find that Priceline chart out here. I don't see it on my screen, although I'm sure it's there. How can you find anything in that mess? I need to do a little housekeeping there on this page. But PCLN, that is the ticker symbol. So let's go take a look at Priceline. Priceline had gapped up. So this thing really in a consolidation range. This had gapped up on the 2nd of November. Came into an area that has held as resistance here for a number of sessions. That being the, give me a second here, we'll draw the line across. Let's put this in black this time. That really being the high of September 18th. So you've got Priceline gaps down with volume, big volume, on August the 8th out there. Gaps down with 6.7 million shares out there. Has not gotten back all the way up to fill the gap. The gap would be August 7th. The low there, 672.76. However, the area here that is holding as a resistance point happens to be the September 18th high, $649. You had a move up there. Priceline moves up into that area on November the 2nd, does it with 2.5 million shares out there. And so really this is trading in a trading range, $640 down to the 550-ish level. 877-927-6648. Dow off 21 points. S&P up 87 cents. Composite up $5. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow off 32 points right now, S&P off 2, Composite up 2, small caps off 2 as well. A lot of 2s out there. Let's go take a look at some of the equities here in the Dow. Leading the Dow right now, dollar-wise on the way down, you got Home Depot having a fantastic trading session yesterday, up with volume. We've got 21 million shares, so this has a nice high-volume high out here. Today, under a little pressure, down to $1.03 on lighter volume. So far today, 3.2 million shares. We'll go ahead and we'll put this on an intraday chart and see what it's doing. It's coming back and trying to test the low of yesterday where it went ahead and gapped up. That would be the $62.15 mark out here. But Home Depot's got it all. Got a confirmed A to B equals CD out here. It's got a high volume high. So it is a nice looking stock chart. Let's go ahead and put this on a 10-minute chart. See what it is that we have out here. So you can see Home Depot coming back into the area. It looks like it already here while we were on just talking about it, has now tested the low of the gap up from yesterday at 940, 62.31. Let's take a look at the volume out here on Home Depot. Pay attention to see if it gets inside the gap. And you want to wait for some bullish candle signals. So there's a line going across. Certainly volume-wise, nowhere near the type of volume it's going to need to really break this thing down. Of course, if it can get inside the gap, close below 62.31, would set up a possible buy to consider down at the 61 level, 61.29, 61.16, right inside that range. This area here ought to hold. So we'll pay attention to Home Depot. Come back certainly and take a look at it during the trading session, but more likely tomorrow, where we will have the information on the daily charts out there. But you can see as it's pulling back into this area here, 198,000 shares, 500,000 shares, all of that going against 2.1 million shares. That's on Home Depot. To the upside, we've got Cisco. They were out with earnings. Guidance was kind of so-so, but up $1.04 right now. CSCO is the ticker symbol. You can see it gapping up with volume here this morning. So let's go take a look at this. Here's a equity pulled back into an area where it had last broken out, pulled back a little bit further than that area. Let's just let me refresh my screen, make sure that I have all live, active data out here. And as we take a look at Cisco, this had a nice sign of strength here on the 16th of August, up with 152 million shares out there. Let's take a look at the retracement level. So this thing really been in a sideways consolidation between the gaps down and the gap up. It had it broke down here back in May of 2010 with 200 million shares to the downside. So it's been trading in this little sideways consolidation trading range, the top of it being in the, say, the $19 and change range, all the way down to the lows that are here out at July the 25th, out at $14.96 out here. But let's go take a look at Cisco in a little bit longer term chart. So this is kind of, no, it broke out there. If we take, let's look at the retracement here. So let's look at the retracement off of the low to the high. And what we can see is it came back into that 0.618 level, which was 1679. Actually, in the last 4 trading sessions, so we go back to November the 9th out there, closes at 1682, closes at 1685, closes at 1685 on November the 13th as well. So it closes out there. You've got some narrow-ranging bars. And what it does this morning here, gaps up. Trading at the low of its trading session here. Don't chase this or anything. But it looks like Cisco may, let's put this on the intraday chart, see what it's actually doing here intraday, and we'll put it on a 10-minute chart and see what the pullback is. So gapping up on the 10-minute, making a nice little shooting star, but pulling back on decelerating volume out here. So it looks like Cisco, when it regains its strength, ought to make a run for that consolidation high. Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding. How are you today?
Steve, how are you?
I'm doing wonderful. You wanted to look at Facebook. Tell me what you're doing and how I can help you.
I'm in the position for a very small position since yesterday.
Okay.
But what my question is, I'm trying to get into it again.
Okay.
With a little bit more bigger position. So my question would be, where do you see the retracement will be from this move? What you can see as well. Do you see a longer move on this for this equity?
You know, it's a great question. So we have like about 800 million shares or so hitting the markets here. So let's try to dissect that one when we get back from this break. Please stay on the line, Ilka. We'll be back to you. And then we're going to go out to Fort Madison, Iowa, to our man Ken. We've got the Dow off 47 points. Everything is now red. What's going on out there? Where's that new moon? We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow trading on 52 points right now. We're going back up to Boston to Ilka, and we're taking a look at Facebook. And Ilka, I've got a 10-minute chart up on the screen here. So what Facebook has done on the 10-minute chart, let me just refresh my screen here, is it coming up against the area where it most recently, a little swing point that went into the close on the 26th of October. Now, the volume out there on the way down as it gapped down the next morning here was only 17 million shares. So you're coming into that level with the volume. At least that's what my chart here shows. So now it's gotten into, on an intraday basis, it's gotten into a little bit of an overbought territory. So it just either needs to move sideways or pull back for its next move. So, you know, the pullback area, boy, that one's a tough one to actually, you know, I don't know that the Facebook today looks like it'll pull back into the 1993 level. I mean, is that what you're thinking?
Yeah, I don't think so either.
Yeah, I think what it looks like it really wants to do in order to work off this little overbought condition here is just simply move sideways or pull a little bit lower. But it's got too much strength there in that open 30 million shares. It would need a lot of energy to really pull back here. So, you know,
I'm not even looking at it today. I'm just looking at it because I'm in a position, so it doesn't matter.
Yeah.
But and I don't think today's move is over. I think because that volume is high there.
It is.
So it needs to do some little divergence. But if it after that little move,
you know, it's. I think you're going to get your best indication here over the next week or so. Especially, especially next week, because you've got so many shares that have now been released to the employees, and the question is going to be, how much selling pressure is going to be out there, and how is that going to be consumed by the marketplace. So I think you just got to watch the stock chart pattern. I mean, this has this little high volume high. I mean, I see what you're shooting for, at least the October 24th level, which is at the 2285 to 2425. And the volume there is 228 million shares. And so far today, not bad. You've done 103 million shares in an hour's time. So,
and depending on the volume, because there is still that high volume on the opening of that incision. I mean, when it started. So
I think it becomes
the low risk I have that I'm not worried about it. The thing is, though, I was trying to get into more positions. I just don't want to chase it.
No, for sure. And I think Facebook becomes much easier to trade once all these other shares. So next week, hard to believe, but we're coming into Thanksgiving, so you got Black Friday, not Black. Well, I don't know what do they call it. Is it Black? What do they call it?
They do call it Black Friday, but
do.
now it's going to be Thursday evening here in Boston. They're opening the stores.
So it's Gray Friday, Black Thursday evening now, or something. So
yeah, how sad.
It's terrible, isn't it? My opinion, it's terrible. But
I agree.
But so I think that that's where you're going to start to. That's where we're going to start to see. So between people are going to change their mind into the shopping mood, into the gift giving mood, and so forth. And here's where we're going to see how many shares are actually going to hit the market, or whether people are going to hold. And they're saying, hey, just like Gilk, I see that high volume opening. I'm going to stay in this thing until it gets to $45. So.
Yeah, in the market, I agree with you. It's at this point definitely it's showing that it's at least stabilizing. And we will see what happens.
Yeah,
I believe we may actually be setting some nice moves.
Yeah, it's lost its energy to the downside here. And, so from my standpoint, we got all the factors that we need in order for the market to bounce. Now, yesterday we had a new moon. Today we had the moon at perigee. Tomorrow is a 4-planetary index state. All these things factored into the candles that are suggesting that the market is losing strength as well. So it's all coming together. You just don't go all in or anything like that. You just simply use money management and take your trade and see what happens.
And you're the best teacher for that. Thank you so much.
Thank you. I appreciate that, Ilka. Have a great day, and make sure if we don't talk to you before Thanksgiving, have a happy Thanksgiving.
Oh, you bet. And Steve, seriously, have a wonderful Thanksgiving. You guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that. Absolutely, we do. You bet.
Yes. Bye-bye.
Let's go out to Fort Madison, Iowa, to our man Ken. Ken, how you doing this morning?
I'm doing great, Steve. Thanks for taking my call.
Oh, my pleasure. Always good to hear your voice. You got a great radio voice.
I'm sorry?
You got a great radio voice.
Really?
You do.
Oh, the first time I heard my voice on a recording, I couldn't believe it.
Oh, yeah, I agree. It is a different kind of sound. People hear something that I don't hear, so I don't know.
Yeah, I think I sound like I'm from way down in the Ozarks, and I was born in Colorado, so I don't know.
Were you? Okay. What part of Colorado were you born in?
A little town, it's up near Cripple Creek, which is better known than where I was born in Victor.
Okay.
This is a small mining town.
Oh, that's great. That is great. That's absolutely great. And so now you've always been out west? Have you ever lived out east or down south or anything?
Yeah. I went to school in Kansas, then I moved to Iowa with the railroad, and I've been here ever since.
Oh, that's great. That's great. You wanted to take a look at BlackRock Kelso Capital. Tell me what you're doing and how I can help you.
Well, I bought some yesterday at 971.
All right.
It's down a little bit this morning, and got some volume this morning, I think. So.
Okay, so let's go take a look at it. It's trading out at 960 here right now. You'll hope that this thing will find its legs here at this little high volume low, which is the September 18 time frame, 957. Now there is a volume of 1.7 million shares. Their volume so far today, let's take a look at it here, doesn't seem to be too bad, Ken. 132,000 shares. If this closes below, so it's going to test this low from September the 18th, where it had a gap down. So if it closes below 957, that says that it could easily travel down to the next swing point, which would be August 2nd. That would be $9.25. So I don't know where your stop is, but that's one of the things that you have to, be paying attention to. The volume certainly has been decreasing here over the last several trading sessions, and it's not going to have the volume to necessarily take out that low of 957, but you don't really have a sign of strength in this to the upside. You've got more signs of weakness than you have signs of strength. Now, clearly this has been consolidating since February of 2012 out here. So it is making, in this case here, it is making higher lows. Of course, today it might go ahead and adjust that statement. But let me see what the average true range on this equity is here for you, just so you know what the average daily volatility is. So we're going to take a look. This is a BlackRock Kelso. The ticker symbol, folks, is BKCC. And when I hit this little search button on the position size tool, what you will see is the average true range on this is 24 cents. So, and today it's probably already traveled more than that because you went from 9.73 down to 9.60, so 23 cents already today. So, that's what I see on this. And so if you get it closed below 9.57, you have to decide whether or not you're willing to take the heat all the way down to the 9.25 level. If not, close it out and wait for it to get down there and and create a tip. But the problem with this equity is that once you're below this area from September the 18th, that's probably the level where it would bounce up to, because then it's going to run into an area that's now potentially creating a resistance. So that's how I would take a look at the trade.
Well, the reason I thought it was a winner is because the symbol has both my wife's and my initials in it, so I thought surely it had to be a winner.
I love that. Hey, Ken, that's how I pick horses.
Well, yes. All right, Steve. Thanks a lot.
You bet. Thanks for calling. I love it. There's always a story behind a stock or what have you. Folks, the very first horse race that I ever bet on, an underage minor, of course, and it was in Detroit, the DRC, the Detroit Race Course. And a friend of ours had some inside information, and so he gave us the numbers. It was going to be is it a Perfecta? Is that the two-horse? I think it's whichever one. You can see how into horse racing I am. I think it was a Perfecta, where he called the horses in the order that they're going to finish in first and second. So he gave it to me. Had inside information. We got to the race course. I put down the bet, and sure enough, the horses came in exactly as they were supposed to. I went up to the window. I couldn't wait to collect my winnings. Unfortunately, I had a version of dyslexia, and I had reversed the numbers. I did not have a winning ticket, only in my mind. My friends, though, they had the winning tickets, so that kind of turned me off from horse racing out there. But whenever I've gone out just simply for some casual fun on any horse racing, just like Ken out there, I'm always looking for some type of horse or some type of number that just simply, or some type of name, really, that simply rings home. But you don't want to talk about horse racing. You want to talk about these markets out here. So let's continue to go take a look at them. You got Apple now down 42 cents. Let's go take a look at Apple, see what she is doing out here in the marketplace. As soon as I can find that stock chart, Apple trying to bounce out here. We are going to see a bounce out of Apple. It is really oversold out here. Of course, right now it is doing nothing more than moving sideways. It had made a 1 to 1.272 A to B equals CD down. I'm going to go ahead and delete that. What we can see here is really just kind of some narrow bodies here. So the selling in Apple has taken a little bit of a pause. Is that a pause to move further down? If you take out the lows from November the 9th, then I say it wants to go ahead and move lower. Of course, Apple moving into the swing points out here back on May the 18th. Those swing points only have 26 million shares or so. What Apple did yesterday was, really? Is that really right? 6 million shares? Let me refresh my screen here. I didn't even look at what the volume was. No, it wasn't. Okay. 19 million shares. Whew. 19 million shares coming against 26. 18 million shares coming against 26. 33 million shares from, looks like Friday's action. So then it had volume. Certainly had volume, 37 million shares on November the 8th as well. But Apple here trying to just simply take a pause. Where could Apple bounce to? Well, Apple could bounce to certainly at least a dead cat bounce. That would be the 0.382 level. That would take Apple up to about $600, $599.18, I believe is the number. But it's got to hold the low of 533.72 out there. Let's go over to the ETFs, see what's going on inside the ETF world here. We'll go take a look at the 10-minute charts first. Let's go take a look at the Qs, see what the Qs are doing right now. The Qs are trying to tackle the low from 940 yesterday morning, 6.9 million shares as the Qs opened up. As the price is moving in there right now, again on a 10-minute chart, the most recent one was at 1040. That had 4.2 million shares, 4.2 going against 6.9 million shares. This area here should hold. That is on the Qs. That is a test of the lows, and I suspect that we'll see, well, certainly we're seeing tests of those areas here. Let's go take a look at the SPYs and the diamonds and the small caps, see what they also are doing. Looks like they are making a expansion of swing points. Let's go take a look at that because they have taken out the lows from yesterday morning. Now they've taken out those lows on lighter volume at 940, 15 million shares when that area was taken out with 10 million, 8 million, and on this 10-minute bar here, which has 3 minutes to go, it's losing energy, 3.6 million shares so far to the downside. Let's go take a look at expansions of swing points and see what that is on a short-term intraday chart. The 1.618 expansion takes you into 136.84. You're at 137.20 right now, which is really in the 1.272 expansion of swing points. Let's go take a look at the diamonds and small caps. The DIA is the ticker symbol, also taking out a swing point here with lighter volume. The diamonds taking out the area from 940 on November the 9th. Let's go ahead and draw the lines across here, as well as the volume pattern. As we take a look at this here, let's see. We're going to go against the easier one that it could be going against, which is the actual 940 time frame. That had 679,000 shares. It came through it, or the market came through it with 287,000 shares, then 293, and now in this session here, 87,000 shares with 2 minutes to go. So it is truly losing some steam. Of course, needs to get back inside the swing point from November 9th at 9:40 a.m. post haste. Let's finish this up here. Let's clean this up. Let's go take a look at the IWM, see what the IWM is doing. Trading out right now at 78.13, taking out swing points. Let's try to find some A to B equals CD patterns out here. Let's take a look at the most current one, which will be coming up through the swing point at about 12:40 in the afternoon on November the 9th out there. Let's go ahead and take it down to right about here, which is, I'll tell you what that price point was in a moment. We're going to take it down to the low at 12 noon on November 12th, and then the retracement up to 120 in the afternoon on November the 12th as well. Now, let's take a look at that retracement level. Let's go from A to B and see what kind of retracement that we got. You got Sweet 618. How does it do that, folks? The number, 7961. Where did it retrace to? 7962. Off by a penny. Anyways, does right now a 1 to 1.618, A to B equals CD down, and this could move. Let's take a look and see if this is forming a butterfly pattern here. I'll do that during the break here. 877-927-6648. Dow off 60 points right now. S&P's off 6. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Selling pressure continues here in the markets. You've got the Dow off 85 points right now. S&P's off 9. And let's go take a look at the daily charts on the ETFs out here. We'll start with the SPYs. You've got the SPY right now trading out at 136.98. If we take a look at what it's trading into the swing point here from August the 2nd, that had 200 million shares. Also into the level of July 27th out there, that has 237 million shares. As you came in yesterday, 122 million shares came in a couple of trading sessions before. You did have 200 million shares on November the 9th. It's going to need to pick up its energy on the way down. Looks like it wants to test at least the low of July 30th. That would be 138.27. Perhaps even get as low as the August 2nd level. That would be 135.58. It's at 136.96. As we take a look at volume so far here today, in the first hour and a half of trading, 47 million shares. So it does have some energy in it to the downside. We'll see if that continues. That's on the SPYs. Let's go take a look at, let's round this out. We'll do all four. We'll take a look at the Qs out here, see what's going on inside the Qs. We'll look at the exact same swing point, or maybe it's not the exact same swing point. We're going to look at July 25th out there. 46 million shares is the level. You can see the Qs getting down there yesterday with 43 million shares, rejecting that area, closing higher. The actual high of July 25th is 62.95. Yesterday, there was a close at 62.98. That is under attack. Now, you do have volume this morning, 22 million shares in an hour and a half going against 46 million shares. So that does have the volume. That says that the level of 62.15, now the low of that swing point, is certainly a game on. Let's go take a look at the diamonds. I think we started with the SPYs. We'll do the diamonds, then go over to the IWM. We take a look at the diamonds. Also, the diamonds dealing with August the 2nd. That swing point has 11 million shares. Of course, it was tested yesterday as well as on the 9th. The 9th had 6.5 million shares. Yesterday, 5.4. So far this morning, 1.5 million shares. So a bit light, certainly a bit light as it takes on the level that's got 10 million shares. There is a little gap out here. So it looks like the diamonds, they are into the little island reversal candle formation from July 25th out there. So they're picking up passengers. I still expect we will see a bounce out of here. So the diamonds now closing that island reversal candle formation, closing that window, repairing it. Let's go take a look and close this out by taking, well, I just deleted that. Let's go take a look at the IWM. We take a look at the IWM, trading now below the 0.618 retracement level. That's out at 77.97. This also, let me refresh the screen, make sure I've got the accurate volumes here. So as we take a look at the small caps, yesterday moving down with 34 million shares. And where is this thing headed to? This thing also headed to an area where there is a gap. That is inside the August 3rd and August 2nd candle. So you have a little gap up on the IWM. The 77.31 number, that is the August 2nd high, 43 million shares, gaps up with 52 million shares. So that's really the benchmark that you're looking at. That low on August 3rd, where you've got the open window, 77.65, I suspect that is where the small caps want to travel to. 14 million shares so far here. Stay tuned. We got Basil Chapman coming up next. Larry Pesavento from 12 to 1. Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, the Tom O'Brien Show from 4 to 6, King Dollar up about 5 ticks right now, gold flat down $1.30 out at 17.23, silver not doing anything, up 3 pennies. Over in Asia, the DAX giving it up right now, down 1% off 81 points. Thanks for being here, folks. Stay tuned for Basil. I'll look forward to seeing you tomorrow morning. Take care.